Funny now joins us. Let's take a conversation forward. Jinesh, it's been a good year, and it's been a good year for equity investors. What do you think lies ahead now? Do you think a lot of recovery, lot of earnings growth, lot of normalization of the macro? Is all that in the price? Because I read a CLSA report in the morning which seems to be claiming that Nifty is trading at a 40% premium to historical averages.
Yeah, hi Nikunj. So I think after the pandemic, we have a good recovery, and surprisingly, the resilience of the Indian economy, Indian citizen, has led to economic recovery, which was much faster than the expectation, and hence even the numbers, if you see Q2 numbers of the listed corporate entities, have been much better than the expectation. Going into Q3, I think the momentum remains strong. Obviously, let's say 70-80% would be priced in terms of what numbers would be coming because of the expectations also rising. So I think it should be more of a sort of a consolidation phase before we move back to second level of trajectory. And that would be, I would say that would be decided by the budget, the outcome of the budget, and how government wants GDP to further take the momentum upwards over a period of next 6 to 12 months.
Jinesh, so far markets are holding beautifully, even though now there is a real threat of a severe lockdown in UK and Europe. This is something which nobody anticipated and nobody was prepared for. How come markets are not reacting to what's happening in Europe? And I'm talking about global markets here.
So I think, Nikunj, we are already into this pandemic for last 8 months. Obviously, there are some concerns in UK about the new strain, which you just alluded in the earlier comments. However, we don't know the outcome of it, how fast it is spreading, and what is the difference between the earlier virus and this virus. Obviously, there would be some concerns in Europe, but fortunately, the international borders are closed. The travel movements are restricted. So to that extent, hopefully this should contain to that area and it should not spread across the world. Also, at least in India, what we see is there are improvement in the overall recovery rates. The mortality rates are down. The vaccination is around the corner. Any delay on this vaccination, I think, would be more negative for Indian economy and Indian markets, as compared to, let's say, what's happening in UK.
Jinesh, so what do you feel, apart from what we're seeing globally on the medical and news front, in terms of near-term triggers? Will you be watching out for the budget? Would it be earnings from the budget? Are there specific things that you'd like to hear or that you're expecting now that we're getting feelers and commentary, suggesting that there could be some big bang announcements coming up?
I don't know about big bang announcements. I think people will be closely watching this budget in terms of the intent of this government to take this GDP growth forward. After coming from a slump, if we grow, let's say, next year by 10% and then get into the trajectory of 6.5% GDP growth rate for a longer period of time, then I think it would be a good run from the economic perspective, and that would be helping even the EPS growth, at least for the listed companies who are able to gain market share in this 6.5% on an average GDP growth rates plus inflation. And so if they can grow at, let's say, 1.52x of nominal GDP growth rate, there could be huge money flow which can come to those companies.
Okay, let's talk about financials then. And you're continuing to up your exposure there as well, and that's clearly betting on the recovery coming in. Would there be a preferred case within the financial basket? Is there a strategy with which you're looking at potential opportunities there within that pack?
So we continuously look at the opportunity depending on the parameters what we have in our process system. If you really see our portfolios, you will get to know the kind of stocks we have, and we have been holding it for last many years now. Even during this fall, we have added over a period of time after getting the understanding of how the economy is back and what is the asset quality issue or the capital and the solvency issue. What I would like to say is the company which is able to manage its I would say balance sheet well in last 8-9 months. Company which is able to raise capital at a good valuation, and company which is able to get market share across its business vertical is what the preference would be. And as those companies become bigger and bigger, more money would be pumped into those companies.
And given that we've started to see more and more rotation or broader participation in the markets, what else is catching your eye? What are some of the themes that you feel could now grow stronger, over the next year or two?
So, if you are betting on India, India is a domestic consumption-driven economy. So, anything which helps revive consumption, anything which helps revive jobs, anything which helps revive per capita incomes is what we normally look at. So, across sectors, we don't want to ignore any sectors, and we are picking and choosing stories from each and every sectors who are leaders in their space or has the potential to disrupt and become leader in their space. So we have a universe of stocks across sectors, and we are picking and choosing as we get a better understanding of the business and its intrinsic value.
Longest time you owned stocks like Bajaj Finance, HDFC Bank, DMart. At a time when economy is making a comeback, steel, cement, those are the sectors where the outlook seems to be slightly brighter. Are you looking at rotating back into deep industrial cyclicals?
Because we do have cyclicals in our portfolios, and as I said, we are not ignoring any sector because you are on the revival phase after such a huge slump. And obviously, different companies, different sectors will bounce back at their appropriate time. And we do have stocks in this cyclical sector, which is more of an capital goods and cement sector, and also auto and auto ancillaries. So if you see our portfolios, you will find stocks all across these sectors. So what we try to do as a philosophy is you be diversified across sectors, but concentrated by stocks which you like, which you have conviction, and you have a reasonable estimate of scalability of that business model.
Old timers would say there are two benchmarks which we should use to understand if there's euphoria or froth in the market. One, retail participation, which is at an all-time high, and second, IPO market activity, which also is at a relative high. A stock like Burger King, we know crazy things have happened there. We know crazy things have happened in all the IPO, all the companies which have gone public. So do you think the 2-2 signs which have been used in the past by market watchers to call the market top, are they flashing in red now?
So too early to say that, because we have just come out of this pandemic and there are one or two IPOs which are going in the sense the way the funding is going to those companies. Obviously, the cost of capital is playing a big role. If an HNI is getting a funding at 6.5%, why that HNI would not participate more? So that is what is happening. It's a power of money. The lower interest rates is what is helping such a liquidity. If you really see, still liquidity in the system is also very, very high, and that money has to be used somewhere. And so this is one of the route even the lenders are using to, let's say, provide loans or funding at 6.5% for 7 day or 10 kind of an event. So I think too early to say that the froth in the system is there. I think wait for another 1 or 2 months, you will get a better picture in terms of economy, in terms of how the budget comes. whether that budget is a dream budget or it's a normal budget. What's the intention of the government in terms of taking GDP to next level in terms of revival, and all this would decide the fate of the markets. I think there is some froth which is building up, no doubt about it. So there could be volatility if there is an event which is not in sync with the market expectations. So you have to keep your eyes, ears open, have to be very, very agile, and ensure that, at least from our point of view as a mutual fund industry, we have to ensure that you are not getting sucked into this rally and not trying to pick and choose all the stories which are flying in the market.
What's been your last acquisition? I'm just trying to understand the tone here without getting into a stock here. What's been your thought where you think that, look, this was not a good idea or not a good stock to buy 6 months ago, but now things have changed, that the outlook and the macro and the earnings look favorable?
So I think the biggest, I would say, the fall which came was on the financial sector, and for right reasons, I would say, because economy was closed down for 68 days. You were not aware that how the asset quality will behave. There were a lot of reports which were coming out about the asset quality issues which can crop up for the Indian financial system. And if you see the top tier 1 company and the tier 4 company, all were down anywhere between 30, 40 to 50, 60%. So I think that was the sector we were genuinely looking at. We could have added more. I'm just trying to say that. But we already have a good position in that with good companies. And we have participated in the rally which has come. So I think financials, auto ancillaries are more GDP multiplier stories. And as you get more confidence on the GDP multiplier effect, obviously with the efforts of the government in terms of giving stimulus in the form of ECGLS scheme, also RBI keeping liquidity, significant liquidity in the system and keeping the interest rates low. All that has helped the financials in a big way. And financials being sort of a backbone to the economy, we still feel that there is a lot of room for growth, lot of room for profit making. So maybe we should have bought more, few more percentage points in that. But otherwise, I think from a portfolio perspective, we are okay at this juncture.
Sure. What about PSU banks, Dinesh? Is that something that you would look at?
So we have an internal process of bringing stocks into our universe, and if they fit in that universe, and it's a very simple philosophy of governance, growth, stability, scalability, and ultimately delivering ROEs and cash flows. So if any company fits into that bill, definitely it will be the part of the universe.
Okay, and we've also been seeing the entire divestment theme play out across PSU names, whether they be in energy, logistics, otherwise. Is that something that you've also been tracking? Do you see opportunity, maybe not as a blanket buy across these names, but in specific segments?
Yeah, so we do see some opportunities coming up and we are evaluating it, but obviously the work is in progress. So at opportune time, we will buy, if at all required, in our portfolios.
Basket as well, given that we started to see that uptick in crude coming in and we started to see a move across some of the majors in that pack. Is that something that you're looking at? I understand, of course, a larger chunk of your folio is concerned more with consumption financials, but perhaps as a theme where we may see attractive valuations and an opportunity to really buy in for the longer term.
We do have some stories in some of our smaller funds, and we are definitely evaluating in detail.
Yeah. Okay, Jinesh, great to have you on the show and get in all that perspective on where you feel the markets are headed.